Hello traders, Gary Wagner here. It is approximately 12:45 in Honolulu, 6:45 in New York. It is Tuesday, April the 20th, 2021, and this is a special edition of the Gold Forecast Daily Report. The reason it is a special edition is today we're going to discuss a short-term exit strategy in both gold and silver. It is important, if you're currently long either gold or silver or SLV, that you look at this completely. We'll begin the show now. Gold continued the rally from the double bottom that we spoke about in our opening letter, with today's gain of $8.60, taking the June contract to $1,779.20. You can clearly see this on the standard candlestick chart that we have in the lower left-hand side. The right-hand side is the same chart, although it is in Japanese average format, Heikin Ashi, and it is showing, at least for today, the trend itself has weakened even with today's advance. You will see when we pull up our technical studies why we believe that there is some resistance between $1,784 and $1,802. Traders, we are looking at a daily chart of June gold. As we spoke about in the opening letter and opening statements, we're really focusing upon this double bottom that occurred in March and then went to the end of March. At that point, we saw gold begin to rise. It actually picked up a rise to approximately 1740 before trading sideways. That all ended, of course, on Thursday of last week when we had a dynamic $28 move, followed by Friday's action, which is this candle here, when we saw another $10 added to the price of gold. Yesterday, we did have the highest high since the double bottom occurred. However, it closed below the highs and closing price achieved on Friday. Today, we had a gain, as I said, of about $8.60. We are just at the highs achieved last week, and we can say that there is some resistance in terms of this upside move. It occurs roughly at 1784. That is the 38.2% Fibonacci retracement. The data set we are using begins at 1962. That's the high at really the beginning of the year. And then the dynamic sell-off that occurred up until March, when we hit the first of two lows right here. And then we traded sideways, forming a rounded top. The second of the double bottoms occurred really at the end of March. And then in April, we saw gold take off. And that's what we're focusing upon. The other thing is that if you look at the 50-day moving average and the 21-day exponential moving average, you can see that we're getting very, very close to them crossing. Now, typically, traders do not look at these shorter terms, such as a 21-day, but I think that that's valid. So we have strong support without any question at 1740 to 1750. We are seeing resistance between 1784, as I pointed out, the Fibonacci retracement, and the 100-day moving average, which occurs at $1,802, which is why I'm considering the following. And that is traders to pull profits if we see the market move above the first level, which is 84, and challenge 1800. Because I think that if it challenges 1800, it might go as high as 1818 and then pull back. This is a good place to look to take profits. It's very important that you follow that. Silver also gained today, although it was a fractional gain of roughly 4 cents, taking the May contract to $25.87.5. Traders, as you know, we entered a long silver trade at $25.21. That was on the 6th day of April, and that's what this arrow here is pointing to. We have seen a rise. It is currently fixed at $25.87.5. We are now currently trading in Australia, and you can see that it is up about 3.5 cents from the close in New York. Just like gold, we are seeing a current level of resistance, and in silver, it occurs at the 50% retracement area, which is corresponding to the 50-day moving average. That comes in roughly at 26.06. We're currently trading 25.88.5. I want to see how the market reacts and if it breaks above $26. If we see some real resistance come in, and I'm not sure that it will, that would be a point that you would take profits. However, if we see a spillover and break above this, then real resistance isn't going to come in, major resistance, till about $27. So for those currently trading the silver May contract, we are looking for an exit strategy. If we see any resistance at 26.12, if it breaks through that area, we really, on a technical basis, do not have any real major resistance till about $27 per ounce. Maintain your current long positions in gold and silver, Forex and futures, SLV also, but we talked about an exit strategy in gold, and this is our exit strategy in silver if, in fact, we find resistance at current pricing of 26.12, and we're very close to that because the market's currently trading at 25.87.5. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.